Oh, hey now. Testing 1, 2, 3. So welcome. Today, my summer vacation ends. My summer vacation started the week of the Fed meeting. Every yen pair that was going up until that period has now come down. Very nice. That's what vacations do. And now I'm starting my last two official Harvard classes to wrap up my master's degree. So as of today, I will be studying how bond issuance, so I can issue bonds to raise money for commercial real estate investments, or maybe I'll start a REIT, a real estate investment trust. So that's what I'll be studying. Also, I'll be studying the formation, capital raising process, and investment process for venture capital. How interesting is that, huh? So that's what I'll be doing in the next 7 weeks. I'll try to keep my eyes on the prize as far as the Forex market and the fundamentals and stuff. But my prime focus is to get it done and get out of school. Grow up and get a job maybe, huh? So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So how are you? I hope you're doing wonderful. I hope you had a wonderful weekend. I hope you had a wonderful Father's Day. I started mine with a bottle of champagne, and that's a good Sunday any day. So that's very nice. My phone is just going ape crazy. I think it's my cohort. So anyways, gotta get away from that for a second. So cool. So anyways, welcome to the Forex.Today YouTube community of more than 14,000 foreign exchange traders stationed all around the world. And we like to gather once a day to synchronize our watches, align our satellites, with the overriding goal of helping each other put together trade plans for tomorrow, maybe next week, maybe the rest of the month. So please ask questions, get involved, take notes, stay focused, and let's see if we can help each other, huh? If you are benefiting from these webinars, please thank the sponsor, tradersway.com, by visiting their website, tradersway.com, tradersway.com. Fill out the form to start a demo, download MT4 or MT5, set up a fixed spread account, a variable spread account, or an ECN account. You find out the execution speed is fast, the spreads are narrow, the swaps are great, and perhaps they can earn your loyalty and respect and become the prime broker to your successful Forex trading business. So all they're asking for is an opportunity to earn your loyalty and respect. And they're trying to do that by sponsoring our community. Okay. All right, so let's follow up where we were. Wow. Down, up, down, up. Okay. Obviously, it's a little too fat. But here's the interesting thing. Let's go back to our discussions for last week. We said bulls would obviously buy it here. Bears would obviously sell it there. In fact, you can see this tiny little entry box now. You see it? I don't know if you could even see it. But on the smaller time frame, we even have an entry box. You can see it right there. I don't know if you can see that. We're so zoomed out. And the interesting thing about the bearish point of view is here's the target. Oh, I know, right? Yeah, you too, guys. Happy Father's Day. Right? A boy can make a baby, but a man makes a... But a man is a father, right? So, I don't know. Something in there. So, very interesting. How does it go? A boy can make a baby, but it takes a man to be a father? Something like that. Pure mathematics says you have to be... men are hopeless without a woman. Sure. Okay. So here's the interesting thing now. You got this as a zone, but it's a bit of an up, but anyways. And then here's the next logical zone. Now, all that is, of course, is part pivots, part moving averages, all that kind of stuff. So la-di-da-di-da. But the thing is, it sets up your plan. You don't know if that's going to work, but you can have a general plan, and you can say, well, if I'm going to remain a bear, I'm going to sell a little high up in there, roll reversal, moving average, pivot points. It's like, it's more than one thing, but you don't know if it's the thing. You don't know if it's right, and that's where technical analysis on multiple time frames will help. So right now, this does not look like a good short. Cool, right on. So you wait. Now, what about a bull? Well, bulls had a very difficult, very risky, but still, I don't know, legitimate, I guess you might say, opportunity. The only trade bulls have on this for the month, for this week, was right here at the open. So you either did it or you didn't did it. Okay, you either did it or you didn't did it. Not much for you to do now. Okay? But of course, you would have known this last week. Okay? Cool. So now let's worry about between today and tomorrow. Now, Prince Philip said he took it. It's a risky trade, bro. But at least you got your stop at break even, so that's cool. The next move is up in here. Right? Or, I mean, this has already got the 4-hour 21 in play. I mean, it could do something like this. I mean, it should have already. But really what you're thinking now is this is the next opportunity. So if you're a bear, you'd probably want to see something like this today, which would set up all of the rest of the next week. The rest of the week. Okay? And bulls don't really have anything else. Okay? A bull couldn't really add another trade unless you were higher than this high, but that just puts you into the next bear sell. So what a bull needs now before they can really buy is, you know, let's say a breach of this, a hit of that, a down of that, and then maybe a secondary move up. But that's not even today. I think that's more like tomorrow. Kenneth, how should you behave? In what sense? Okay? In what sense? I don't understand the question. So you obviously know it's a risk-off market, so you should know how to behave. Okay? Okay. And I'll remind you, the fact that it's risk-off is sort of one thing. Remember, we were long, and then I went on vacation, and I was done. That's the real meaning here. All these little candles and all this kind of stuff, it's interesting sort of after the fact to the bigger play, okay? So that's interesting, right? So how do you behave? Well, what did I do? I went to the beach. I drank cocktails, played in the sand, and did go-karts with my kids, which is fun, by the way. So how should you behave? That's how you should behave. Now, that's not a risk off. That's a seasonal play, right? Which you had at least 90 days warning about. So anyways, then you get this down, up, okay? So it shouldn't be a shocker to you that it's risk off because of this area, right? And then now we're down here. So how do you handle this? Well, you already know it's risk off because you've said it, right? So how do you behave in a risk off? Well, you've already set all that up. So now we're just going back to the same question I just pointed out. You either believe it's going to continue down or you don't believe it's going to continue down. So the general idea here is there. There could be various versions of that. There could be off the 4-hour 21. Oops, that was really messed up. Oh, and that's even more messed up. Hang on. Okay. So you have different versions off the 4-hour 21, off the central pivot point, off the M3. So bears have 3 potentials. Bulls have 1 potential. Now I also have market-based pivot points and price-based pivot points, right? Here's my price action pivot points. And so once we get to the central pivot, it looks like it's a 68% overbought. Doesn't mean it'll fall, it just means compared to the time that you're measuring, the data set would be above average. So how should you behave? Well, if you're risk off, then clearly you're a bear, right? So you should sell high at resistance. Okay. I'd like to ask you something. I asked you before, if it was clear that I said the June Fed meeting is the beginning of summer and you need to change your behavior. I think we've already established that in previous webinars. Many of you have been with me for 5, 6, 8, 10, 12 years, so it's nothing new. But for those that are sort of newer to the community, was this a meaningful lesson in of itself for me to literally go on vacation at the top? Was that a meaningful lesson in sort of trader psychology and behavior? To be able to say, yeah, on this day, it's all going to end. And so I'm already planning. I mean, how long does it take to find and rent a beach house? It takes more than a day. Think of it. How far in advance do you need to rent a beach house? Or a beach condo? Hotels, I didn't stay at a hotel, but hotels are... for beach is difficult, I think, but it takes some forethought is what I'm getting to, right? Someone had to think in advance and say, okay, right? You have to think in advance to say what day is a good day. That would be a personal expense. Too bad, right? But that's the thing, like, based on seasonality, I can say, this is the day I'm going to stop trading and just be sucking down drinks, right? On the beach. So the reason it's important is you have the right behavior here and the right expectations here. It's not that I'm shorting, it's that I am no longer buying. And that we could talk about it here as far as the velocity of the upward move and the instant stop of the upward move. But it's not that we talked about it, you know, just before it happened. Actually, 90 days, 120 days in advance. Obviously, it takes a long time to get a, you know, reserve a spot for your family on a beach. So I thought about this maybe months in advance. In fact, right? In fact, if you want to rent a beach house right now for 2021, you better start renting it now. If you want to be on the beach in 2021, you better be throwing down your money now. Okay? So what day are you going to go on vacation? Why don't you look at the June Fed meeting and plan next year's trading based on what you believe is implied volume and volatility. You are literally, by planning your vacation, predicting the future. Yeah, but then, Brad, what do? You take your, you know, your leather back. You're right. You drag your leather skinned body to where? Colorado, and you go hiking because you're sick of this frickin' beach and you're sick of all the tourists. So where do you go? You go to Breckenridge or something. I mean, you end up going somewhere. So if you want a mountain cabin in the summer of 2021, you better reserve it now. Okay? Right? Yeah, that's true. Yeah, it's true. I got the great place for that. So, anyways, we'll talk about that later. All right. So, anyways, so this price action is la-di-da-di-da. So now, like again, going back to the person who says, "Well, how should I handle this risk off?" Well, the fact that you know it's risk off, you should know how to handle that, right? So, because you've made the declaration. So anyways, right now it's just sort of boring, lame old trading. The way I look at it, and by the way, don't get me wrong, I like lame ass boring trading. But you're going to have some level of patience and discipline. You should probably time things around market opens. And you're like, well, Wayne, that's required all the time. Yeah, I know. So the major thing that changes in the summer is your expectations. Okay? Do I expect New York to just drop like a ton of bricks or London to drop like a ton of bricks? No, not really. But I'll plan it out like this. I've already covered it, but let me do it again so it's clear. I'm planning out my entire week. In fact, I named the video today Weekly Trade Planning. Oh, cool. So if I'm an expert in Great British Pound or US dollar, I'd be looking like something like that. Now there's one more, and I already highlighted it, so let me do it again. Now I got to go into the 4 hour and say, well, there might be a kickoff of this. Okay, now I'll drop it back to an hourly and back out even further. And that move is the 4 hour 21. Now if that kicks to the downside, I'm gonna play it off of here. Okay, I'm gonna give it a little bit lower. I'll squeeze out an extra 50 pips. Why? Because I can. Okay, there we go. Well, it's not, KG says, so when do you look to get back in? It's not that I'm not in, it's that I'm not in emotionally. It's an emotional issue. Okay? I'm also like, I've invested a lot of time and money in some other things too, like summer school, right? So I'm already sort of invested my time, and so I can throw down some trades. It doesn't take very long to throw down some trades, but I'm not really emotionally connected to them right now. right? And so in a summer where, like, let's say next summer, right? I'll be done Harvard, and what would I be doing? I'd be doing something like I did on vacation, sort of one foot in the waves and one foot at my trading desk. And I would likely day trade and swing trade, but not really intraday or scalp, because I don't want to sit in front of my chart for 3 hours and make 28 pips because, a lot didn't happen. So I would just day trade. And the day trading is great because it's usually early in the evening, and you sit down at your charts. So let's look at something different. Okay, here's one. So look at this. I've totally set this up for you on a weekly chart. Look how easy this is, guys. So this is what I would do. If I were me, this is what I would do. All right, so let's dive into this. You can see I got it all planned and everything. Beautiful. All right. What I would do if I were trading and I'm not emotionally connected, by emotionally I mean it may or may not represent my long-term fundamental bias. Right? An institutional trader might look at their charts once a week, every couple of weeks. So I'm not staring at it on a 15-minute chart. But you would plan in such a way that you can time when you sit down at your charts, how long you're going to be in, how generalized your... See, when you're doing like a monthly position trade, for example, your support and resistance levels become very generalized. Sometimes it's things like buy at 1.5000. But the thing is, they're generalized because everybody sees them, and they're at such a high time frame that you don't see the details, compared to a scalper, right? So imagine the analogy is like this, where you're flying over in an airplane at very high altitude, and you can look down and you can see the terrain, and you can see the buildings, and you can kind of make out cars, but you can't tell what kind of car. You can't read the license plate. You don't, right? You can just barely see the colors, but you can't see the people. And you have this general idea where north is, or where the weather is, and whatever, right? Higher level. And in the summer, I might be more higher level. I might be a lot more patient. I might wait for like weekly candles, right? So for example, this one we have planned out. It's supposed to actually... Let's put it back in here. This is supposed to be green. Okay. So you're putting together these plans. Support, 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 support. You can see the sideways, down, down, and then the big up, and then What does that add up to? And then I go back into here, and it's one weekly candle. Right? It basically 382'd off of a weekly candle. And there's a little bit of a role reversal here. So you're kind of looking for these bigger generalized moves, and then you drop into smaller time frames like dailies, okay, and 4 hours. And you're using the 4 hour almost like a scalper. You're scalping on a 4 hour to be in something for really a week. Like, if you're going to have your family and your friends, you're hanging out on the beach or at the boat or something, you don't really have time to, like, every frickin' day set up a new trade. It's just, it's too much work, right? Especially if you have low volume and volatility. I mean, it takes work to set up a new trade every day, yet alone every session, right? Takes a lot of work, and you're like, well, I'm on vacation, I'm investing into my family, into my health, into my psychology. So right? So you want to find trades that you can be in for 3 or 4 or 5 or 6 days. Shoot, you'd love to be in the trade for 2 weeks if possible. So that's how you kind of handle it. And the problem with summer, though, is they set up and very often they don't really follow through. So you end up getting something like you get this kind of noise, right? Where it starts out very bullish and then it fades really quickly and you're like, wow, we lost all our bullishness. And then you're like, but it didn't collapse and go all the way down to support. So now I guess it's bullish again. And meanwhile, this could be like a week up, a week down, a week up, and you get caught inside of this and it can become, let's move this, sort of noisy where, you know, the trades set up the same, but like I said, your expectations change. So I enter the trades the best I can using a little bit higher time frame. I'm not on a 5 minute or a 1 hour entering trades in the summer, but I do want to catch what I think is the general move of the now. Now, my fundamentals may want Kiwi dollar to go straight up, but we already played that before the June meeting, right? So I already cleaned that up, walked away, and knowing or assuming, or as we discussed, profit taking and a collapse of volume and volatility, which is amazing because it happened to the exact date, right? So now we've had our sort of pullback. Now we're definitely in summer. We're getting close to July 4th holidays. I expect low volume and volatility, which means if there's no volume and volatility, we're not really going to bust out of support and resistance and create new trends and all that kind of stuff, because really Americans are not trading. Now Europeans might be trading, but they take August off. So how can you possibly handle this? Enter a good trade, ideally generally in your fundamental bias, but sometimes you just might do it technically, and try to be in the trades longer and anticipate frustration with it. Like you would say, well, normally I'd buy this M2 and in 3 days later it'd be at M4. Well, you know what? It might take you 2 weeks to do what you used to do in 3 days. Lord have Percy. What's up, Percy? You see what I mean? Like, it's a psychology thing, right? Like, I'm not telling you to do anything different, but you should do it all completely different. But psychologically, enter a really good trade based on technicals and maybe ideally some fundamentals. Move your stop to break even. Try to be in the trade longer, and don't get frustrated if you don't make a ton of money. The BMW M4? I don't think anybody likes an M4. But anyways, la la la. So there you go. Hey, Alejandro. So I hope that's helpful, because I'm trying to get the thought out of my brain as it's happening, and I'm trying to set you up psychologically, because now is different than later or earlier. M5? No. X6? Right? No, yeah. Well, I bought my wife a BMW, and I'm like, what do you want? And she's like, I like gray. I'm like, gray, okay, I'll go get you a gray BMW. So I bring it back. I'm like, hey baby, look, It's got the M steering wheel. It's got the M seats, $5,000 M seats, right? Huge upgrade. It's got the M body kit. It's got the M wheels. In fact, right? It's got the upgraded wheels from, like it's got this, it's got the upgraded tires. It's got the entire, the entire, what do you call them? The whole ceiling's glass. And so I got that and this upgrade and that upgrade. And she gets in it, puts her water bottle in the cup holder, and the water bottle falls out. She's like, I hate it. I'm like, but I already bought it. I didn't test the cup holder with a giant water bottle that's 4 feet tall. I'm like, why don't you just get a smaller water bottle? Oh, it's so funny. Rookie, I'm sure. Yeah. But it's just funny. Let me tell you, generally speaking, I hate to be very stereotypical, but generally speaking, women don't give a crap about M on a BMW. What does it mean? Oh, it's a special upgrade. We don't need that. So, I'm like, next time I'm just going to give you a credit card and you can go buy your own debit card. So anyways, that's life. That's life. All right. What about this euro? What's the first thing you see here? First of all, there's a lot of data. Great. Percy wants an M4. All right, you can get an M4. You should do it. If you actually buy one, one of the things you should negotiate, one of the things I negotiated is like, I want to go on one of the M racing days for free. So they did that. So that was fun. What do you notice here, guys? Hit resistance, okay. Head and shoulders, wrong. Samuel, you can't have a head and shoulders without a trend. Now, you might be seeing this, and you're looking at it from this point of view. So I think I see what you're saying. I think I see what you're seeing. But the point that I'm getting at, guys, when I say, what do you see here? The thing that jumps out to me immediately is this. Okay. Is it trending? No. Nope. It's not trending. Okay. So in consolidation, I don't know if consolidation is the right word, because let's say there was a trend, then you'd get consolidation, and then you'd get resumption, right? A new higher high. This is just even when Americans feel rich, they don't want to invest into Europe, right? Okay. Yeah, what a range. Yeah, but this is just the daily chart, right? So you have to understand, like, I would say this is the most detail an institutional investor would look at. Like, they don't drop any smaller than this. So they're looking at this saying, okay, for the year, this is what euro dollar did. And right now, it's 2 standard deviations from the average price. Okay? Now, you have to then make a decision. What do you want to happen next? And this is going to be your fundamentals. Okay? So you're going to look at little markers, and you're trying to figure out. Remember, you're not trying to figure out what all these algorithms are telling you. You're trying to figure out if you're a bull currently, right? Let's say, and if so, at what price do you think will you buy it? Okay. A deviation is the opposite of a contraction, or the opposite of a reversion. Okay, you either deviate from something, right? Or you revert back to where that something was, an average. So there's an average price. So imagine you did statistical analysis and I said, add up all these candles and give me the average. So you would add them up and then divide by the number of candles and you'd get an average price. And the average would probably be in here somewhere, right? So a deviation is moving away from the average. And when you get too far from the average, it reverts, a reversion. Okay, that's what that is. So what we're talking about, people, is if you are a bull and things have fundamentally changed since here, then you're going to buy in here. Now, what occurred in here that if you wanted to argue to be a bull, because think of it, statistically speaking, there's no difference between any of those prices and any of these prices, and this is still pretty average, okay? This area in here. So how could you possibly argue that this is going to make a higher high? I don't use monthly charts, Peter. It's way ridiculously, stupidly slow. Okay, you're looking back 5 years, and that has nothing to do with now. Like nothing. So I don't go that far out. Even daily, I rarely look at daily. I look at daily for setups like this. So like, for example, if you're a bull and you didn't buy this daily 21, this M2 here, you're missing a lot in your trading skills. There's a giant gap. So I'm trying to shine some light in some of these dark places, okay? So, going back to this, guys, if you believe in this giant pink arrow, what gives you the I don't know, the strength what gives you the conviction that this time is different from all these other times this year? That this time it'll break out, even though it hasn't done it all year. We are halfway through the entire year, and you're like, well, now it's going to break out. Well, why? You don't need it right now, Prince Philip. Don't worry about the yield curve. You're worried about the yield curve, Prince Philip, when you're anticipating a change in market conditions that will force the Fed to change their policy. But that's not what we're playing right now, dude. Right? That's not what's happening in the world. Okay? Yeah. It's like not an issue, right? I can't think of a great example. It's just not an issue. Oja says the bull strength. No. You like it. Irrelevant. Okay? Whether you like it or hate it, it's irrelevant. So you can't like it. The bull strength, but I'm asking you why, not what. There was bull strength here. You like that, you got your ass kicked. And then you like the bearish strength, then you got your ass kicked trading that. All of that is irrelevant. Why? What gives you the right to place money on a trade saying, well, this time it's different? Well, whoa, whoa, whoa. I thought you used technical analysis. Technical analysis is the past predicts the future. Well, this says the past says it ain't breaking. The past says it won't go higher. So what gives you this courage that you're like, well, this time it's different? Well, obviously you're ignoring technical analysis. We are above the 200 EMA. Irrelevant. Who cares? This is sideways market. There is no fair market value. There is no market. If this is sideways, Irrelevant. Okay? Might bounce off. Who cares about might? Come on, guys. Why? Fundamentals. Why fundamentals? Answer the question. Come on, guys. You can do it. I gave you the hint. It was the first thing I circled. Okay? Come on now. What fundamentally is different now than earlier? Thank you. The Fed is not going to cut anymore. We learned that in this period. That, when the Fed says they will not cut further, they will not go negative, that's an announcement of a change in policy. See, they were cutting, and then they get into here and they say, we are no longer cutting. That is a change. See, when they cut interest rates, the dollar is strong. When they don't cut interest rates, that weakens the dollar. So this is fundamentally different than this. Okay, and this is like, you have to understand where this was where we were. This is COVID hitting. This is the market trying to figure out what in the heck is going on in our world, and the Fed is, and the government, and all of this is $6 trillion, and then the Fed says, new policy. So we're right back to here. But now you're saying it's going to go higher. Cool, right on. Then you probably want to buy at the M2 daily 21 EMA, which has already occurred. So if you didn't do that, you're not thinking hard enough. Now we drop into the smaller time frame, and now you got to figure out how to play the rest of the week. Obviously, there's some challenges ahead of us. Obviously, we don't know if if this new trend will develop. I didn't want to do that, but okay. I want to do this. Okay. So, if you didn't buy the bottom, so I'm going to mark this because this is obvious. Okay, that's standard operating procedure, guys. But it's a standard operating procedure, and what you can see, my price pivot points is down. Okay. Is anyone starting to appreciate the combination of market pivots and price pivots? Right? Currently, price is down, but if you're a bull, this is your buy zone and there's your target. So I can draw this differently to make the point even further. I could take this off, delete. Okay, and then I could go insert, indicators, custom, biased pivots, bullish mode, weekly plans, go. Okay. In fact, let's clean this up even further. Let's just look at this week. All right. So if you're a bull, this green zone is this week's buy zone. So this is my point. If you are a bull in euro dollar and you were at your charts Sunday afternoon when the markets open for the week. If you miss that, you're not trading properly. You're not doing the work. You're just not doing your job. Because at that point, you're like, oh, that's the exact price I wanted to buy. So you don't like the fact that it's a downtrend, but you certainly have permission to take the shot. It's not good. But the thing is, if you're not at your charts at that moment, you're not doing your job. The other way of looking at it is it's the only bullish entry that we have right now. There is only one. Now, if you stayed away because you don't like this, okay, that's great. That's cool. But you still should have been looking at it. And if you had played the price action on like a 5-minute chart or a 15-minute chart, you could have worked your way into that trade. You certainly could have done it if you wanted. The issue is if you didn't see it or if you weren't there to do it, then you're not doing your job. If you're a bull that is so straightforward, ridiculously easy. Okay, cool. So now looking at this, if you were a buyer of this, oh, you know what I'm doing? I messed that up, sorry. Let's see if I can reset this. Okay. On the 4 so we have to mark this. Right now, this is the target for the week. And it looks like we're going to stay inside consolidation, as you can see here. So technical analysis isn't even confirming the breakout that you did on your much higher time frame, which would have been further out here, right? So even this week's trade plan, okay, this week's trade plan for a bull is buy that little thing off the daily 21, off the weekly buy zone. Like, you're starting to see how obvious it is. Can you see that? This green zone's where you want to buy. It's the daily 21. Okay, all that kind of stuff. And your plan for the week is this. Now, Alejandro says, well, bears will probably want to front run that. That's why they invented a stop loss. So you should know where a bear would sell. They're going to sell here and they're going to sell here. So you already know that. So Alejandro, if you enter your trades well, you'll have plenty of room or plenty of opportunity, plenty of time to move your stop to break even because you anticipate them selling. So you know where the bears are going to live before they even pull the trigger. Okay? So that's part of your analysis, but what you're saying though is because you're a bull, your plan is your belief, because of the change in the Fed, your belief is we will breach this. Not this week. That's what this says, is not this week. This week is, I mean, anything could happen. But statistically, that's the most likely outcome for this week, which means next week, bears could be taking it down lower. Cool. Well, we'll learn that using technical analysis next week. Okay? But what would be the bullish trade plan? Well, let me show you that. So the first part is the entry. So you have to, I want to make sure you see all this, right? That the Fed changed everything here. So you are a bear on the US dollar. You don't give a crap about the euro. Nobody does. But you're a bear on the US dollar. The second thing is you have a daily 21. Third thing, you have a weekly M2. That's enough. Okay? That's enough. And if you're on a 15-minute chart on Sunday afternoon, you had the exact price to pull the trigger. Exactly what you wanted all weekend. That's what I mean. Like, most people just show up and they're looking for the trade. Fail, fail, fail. If you had waited all weekend, waiting for the market open, you're like, please give me this price, and you got it, done. The difference is psychological. One already knows what they're going to do all weekend, and the other person just shows up looking for something to do. Okay? So I'm trying to train you that this is what you were begging for Friday afternoon, all day Saturday, all day Sunday, and then all of a sudden it's Father's Day and all that kind of stuff, and your alarm goes off. You're like, oh my God, the market's about to open, and you run there and you're like, please give me 112, please give me 112, and it opens up 112. Oh, thank you, Jesus. Boom, and off you go. Or Muhammad, or Buddha, or Lord Krishna. Okay? So, now let's take it to the next step. Where, if you're a bull, where are you going to be? Where's the bigger plan? Because that's the easy plan. Let's take this up a notch and try to incorporate the breakout, which you're predicting. Remember, there's nothing on this chart that predicts it. Your prediction is based off this. And remember, I'm trying to teach you how to day trade, which is this, and stay in your trades longer for a week, but maybe a month. Spreads are not huge at the market open unless you're doing exotics. Okay? And if a 6 pips spread on a pound dollar keeps you out, your trades are not big enough. Okay? Anyways. And by the way, you probably, I don't mean at the exact open. I mean, yeah, at the exact open. But if you waited 20 minutes or 30 minutes to set up your trades and plan it all out, yeah, you'll probably get, your spreads will come down 2 or 3 pips. Yeah. But it's a rounding error for, you know. So anyways, here's the next thing, guys. Here's this week's target. And here's this month's target. So as far as you're concerned, you're on your way to 115. And we're at 112. Okay? So it's hardly anything. It's only 300 pips. It's not a lot. That we used to do that in a week. Now you're trying like, that's what you're going to get in June? Or July? That's the July top, isn't it? So, yeah, not incredible. Let me double check that. Something bugs me about it. Yeah. All right. So, here's how you would plan it. You ready? Here's our best guess. We're planning the future. If you are right with all of this and this, here's what you are planning out. You ready? Up, 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 down, down, up, 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 up. Wait. Yeah, you're right, Alex. I should have thrown in Old Testament God. Okay. And if you're a bear, you're trading the range. It's an easy range trade. If you're a bear, super easy. First of all, then there's no market because you're a range and there's no trend. So the first thing you can do is get rid of these worthless algorithms because nobody cares. You don't care. Let's get rid of this. Let's get rid of that. You won't need the monthlies either, so we'll get rid of those. Okay. So now this is all you're trading. And if you're a bear, you're doing this. Super easy. Okay, very, very easy. So let me go in and give you a look. Okay. I might have to go to a smaller time frame, but I want you to see it up here. Down, 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 up, up, sell. Down, 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 up, up, sell. down, 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 up, sell, down, 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 up, sell, sell, down, 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 up, sell, sell, down, 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 up, sell, sell, down, 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 up, sell, sell. Yeah, Wagner, isn't it? That's the Danube, isn't it? The blue Danube. Is that Wagner? No, it's not Wagner. Of course it's not Wagner. Who the hell is it? It's not. Why would I say Wagner? Now it's stuck in my mind. It's Strauss. Thank you. Thank you, Johnny. Of course it's Strauss. The funny thing is there's like 7 Strausses, right? Was it Johann? Johann, was that you? No, that was Ed. Ed Strauss. The brother you never heard of. I thought there was more. The Johann, Sebastian, and Ed. Or is it Tim? Tim. I love that scene in the Quest for the Holy Grail where the wizard comes out and he's like, boom, 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 boom. He's all powerful wizard and they're like, what is your name? He's like, some people call me Tim. Oh yeah, sorry, Johann Sebastian Bach. I'm sorry, I can't do a webinar. And anyways, all right. So yeah, that's how you do that. That's just very simple price action. Okay. All right. So on a smaller time frame, this is where it gets complicated because the fundamentals are predicting the up and the technicals are setting up the down. So it comes to this. You're either a bull or you're a bear. And you know exactly what your setups are in the future, like before you, right? And you take them or you're not trading it right. So technically, let me say it this way. Technically, during the last week or two, this is what was in play. But by the way, that was expected. So now that we've had some risk off moment, a bull may want to try again. So this is why I say, like, I understand this is an aggressive entry for a bull, but most likely, especially if you use technical analysis to get in this safely, most likely you're going to have an opportunity to move your stop to break even. Nothing ventured, nothing gained. And I described this. You guys remember a couple of weeks ago, I was talking about if you don't shoot, you can't score. So he took a shot. It was a good shot. You had a wide open net. Take a shot, dude. Oh, I'd like to pass it one more time. No, shoot. Take a shot. Shoot. Okay? As long as you can get your stop to break even, take the shot. It's an M2. Like, what the heck were you looking for besides that? It's the only thing. It's the most important thing. Okay? It doesn't make it go up, but you missed a double bottom on a market open on your M2. You should have taken a shot, bro. Take the shot. You're open. Shoot. Shoot. Who knows who Reggie Jackson is? Reggie Jackson. Very famous Hall of Fame baseball player. Mr. October. Okay. not only is he in the Hall of Fame, but he has a record. He has like a world record. Well, it's not a world record, but it's baseball. He has a record in baseball. What is his record? What has he done for baseball more than anybody else? And perhaps this got him into the Hall of Fame. Maybe it got him some world championships. What is the record that Reggie Jackson holds that no one else has ever broken? He hasn't played in decades now, but what has he done that no other professional baseballer has ever done? Maybe that's funny. I thought that was OJ, but he might have been in there too. Well, obviously he did something right. You don't know baseball, but he's won world championships and he's in the Baseball Hall of Fame. So he's obviously done something right. He is a very, very famous baseball player in the United States. Even though he hasn't played for 20, 30 years, he is a very, very, very famous. And the record, look at that, 563 home runs. That's not the record, though. RBIs, amazing number of RBIs, runs batted in. He has the most strikeouts in the history of professional baseball. No one has ever struck out as much as Reggie Jackson did. He struck out more than any baseball player in over 100 years. Take a shot. When he was up to bat, he was interested in hitting it out of the park. Take a shot. Take a shot. How many shots did Michael Jordan miss during his basketball career? I think it's pretty close to a record as well. The greatest basketball player of all time has likely missed more shots than anybody else ever. Take a shot. Where do they remember? The home runs. I think he struck out something like 6,000 times, but he hit almost 600 home runs. Yeah. So anyways, my point here isn't to go for home runs. The point is you should have a plan. Like his plan is he wanted home runs, whatever. The point is, don't be afraid of taking a shot if you know what you're doing. Okay? Like, if you knew you were a bull and you've been waiting a week or two for some profit taking to go through, and then the profit taking's there, and you're like, I wonder if I'm going to have a shot on Sunday when the market opens, and you're sitting there ready and at double bottoms, take the shot. Drop a stop. Who cares if you lose 28 pips? Dude, you're going for 300. Are you cool with a 10-to-1 risk-reward ratio? Then take a shot. What if I lose 28 pips? Well, it's okay if you're making 300. Take a shot. Well, how do I know it's going to make 300? Well, that's what trade planning is. So if you didn't know that here, then this is irrelevant to you. You don't have a plan. You're not doing the job. You're not doing the analysis. You have no strategy. So yeah, you're going to miss that. Okay, you're going to miss that. Okay. But I'll point out, this is where we got out of the market. Playing in the beach, playing in the waves with my children. Cool. Now we got our little correction. Great. But week after week after week after week, if you're a bull on this, week after week after week, month after month after month, you need to look for your lines. Where are your lines? Where's the potential opportunity? And for this week, this is the only thing a bull had. That's my point, guys. If you're doing basic technical analysis with a strategy behind it, okay? Strategy meaning you're bull on this pair because of your bearishness on this USD, and set up off the new Fed policy, okay? So all of that made you a bull here. Cool. So you got some profit taking. So you walked away, and now you want to re-enter. You want to re-enter today or this week, and you'll probably do something similar next week, and you'll probably do something similar the week after, and you'll probably do something similar the week after that. I hope you're getting my point. So the only thing you have for the entire week is this. And if you don't know what that is, you need to take the training courses at FX Bootcamp. You need to join FX Bootcamp. In less than 50 hours, we could address your gap in knowledge. Okay? And obviously, I've been doing these webinars for, 12 years, as long as YouTube's been YouTube. So you can keep watching another 12 years and learn that way for free, where you pay like, what is it, $380? Now you got your knowledge. But the point is, this is straightforward, your trade plan for the week if you're a bull. Now, it might do this. You're like, Wayne, how did you know it wouldn't do that? Well, I wouldn't have known that. You would have lost a little bit of money. Well, who cares? Take a shot. What if the ball doesn't go in? What if the puck doesn't go in the net? Dude, take a shot. Okay? If you can't afford a 28 pip loss because you took a good trade, you're over leveraged, drop your lot size. Okay? But if you are a bull and you're thinking up for the rest of June and maybe even July, take your shot. You're going to be up here by the end of the week, and then it's going to come down here early next week, and then guess what? You're going to take another shot next week. Okay? Do you see? Like, I'm trying to teach you, like, the question, let's make sure we framed everything properly. How do you trade in the summer? You spend more time planning and a very small time pulling the trigger. It's not going to be exciting. You're not going to have 95 intraday trades. Your scalps are going to be mediocre, whatever. But you can scalp. You can just scalp. That's fine. I mean, you can. But it's hard to scalp and kayak at the same time. It's hard to scalp and skydive at the same time. It's hard to scalp and ride your bicycle with your kids. It's hard to build sandcastles and scalp at the same time. You can scalp at Disneyland, but it's difficult. But if you're going to pop a squat and sit in front of your charts all summer, then by all means. Honestly, you can totally do it, but you better be pretty good. But if you're missing the easy trades, like scalping's difficult, by the way. Scalping's difficult. So if you can't get the easy trades, why do you think you're going to get the hard trades? Like, that's easy, dude. Come on. You're a bull and you didn't take that? Like, come on. Come on, bro. Seriously. Right? Come on. You can do it. You can do that. Okay? And ideally, if we get it right, it goes up here, and then probabilities say it'll probably come back, and then after that, it'll probably go up, and all that kind of stuff. But the best way, like that I've been trying to answer that question from earlier, how do you trade in the summer? Well, I would try to take this and I'd try to be in it all week. And I understand it's not going to go up, 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 up. No, it's going to go up, up, up. And just when I feel like it's all going my way, there's going to be a hefty down, down, down. That's why I say it's an emotional thing. As soon as you think you got this right and it's going to do this, no, it's going to do that. Huh. So you're like, well, now we're stuck in a range here. And that's called summer. Okay? But technical analysis will help you through that. So this is the only trade you had for the entire week. This is the only predictable trade on this chart for a euro dollar if you're a bull. So you take the shot and London opens, takes it farther north, jam your stop at break even, you're done for the entire week. That's how you would trade. You spent, well, you spent Sunday afternoon, you entered your trade, then you logged in Monday morning, found your trade profitable, you moved your stop to break even. So by Sunday afternoon to Monday morning, you are done trading for the week. Okay? And you're hoping for a breakout, but it's not guaranteed. Okay? That's that. And we know the potential is up here for the week. So that would be cool. But now you're buying at you're buying at 1180 and you're going for 1280 ish. There's 100 to 150 pips in that. That's a really piss poor week. Only 150 pips. That's not, you're used to making more on a euro dollar, but that's all we got right now. So you could, if this is your target, it might be one of these things where you buy at the bottom and you take your profit. And guess what you're going to do Sunday at 6 p.m. when the market opens, Sunday, 6 p.m. Guess what you're going to do next week? If you were a bull here and it went higher and made a higher high relative to these highs, then Sunday at 6 p.m. next week, what are you going to do? You're going to do something like this. You're going to look at the distance between your central and your M2, and that would be your buy zone. And if you get that right, then you're taking it up to here. And so now I've just planned out the next 2 weeks. This is this week. You take your profit, fades back by Friday. By Sunday afternoon, you're probably buying it back up. Okay? So that's like an if-then statement. If this happens, then you're going to behave this way. If it does this, that's different, isn't it? I don't know what the future is going to bring, but I'm planning what is likely to happen. Now, if I'm a bull and that Fed meeting makes the difference, then that's my alpha. And my alpha says, if that's correct and other people agree with me, we will actually be up there in 2 weeks. So if that's true, then I'm a buyer here, I'm an exiter here, and I'm a buyer here, and I'm an exiter there, and there's probably going to be another one back in here 3 weeks from now. Okay? But if that fails, I'll know it because I'll have my trades will look like this between now and next week. And I'm like, huh, guess that didn't work. And I get knocked out at break even. Right? Wah, wah, wah. And blah, blah, blah. All I ever hear is go blah, wah, wah. And blah, blah, blah. Right? That's it. But you had the shot, my friend. Okay. Yep. Isn't that cool, FT9? So here's the thing. Having such a declaration doesn't help you be right. It helps you be consistent. One of my goals is consistency. Okay? And consistency is translated into low volatility. I want my trade history to have low volatility. Yeah, yeah, my university did the same, but I'm smarter. Sounds arrogant, but I know it's wrong because I've been doing this for 15 years. I know they're wrong. The issue that they're not taking into account is behavioral finance. And that the fact that the US dollar is a reserve currency. Now, if you're cutting interest rates on the euro, that's completely different. So people at the university have never looked at a chart. All they did do is teach you what they were taught in school, right? And if you want to write a textbook, what you do is you buy 20 textbooks and you write your textbook based on all the things in those 20 textbooks. So you keep learning the same nonsense over and over and over again. But I've sat in front of my charts for almost 20 years. I'm right. So it's not arrogance. It's I studied it. Okay. New Trader says, why no negative interest rates make the dollar weak? Once again, behavioral finance, risk on, risk off. Again, guys, if you're discovering that you have massive gaps in your knowledge of trading, you need to take the training courses. And once you take the training courses, you get invited to my weekly group. And then if you discover you need even more, there's even more coming. But, right, if you don't get involved, I can't help you. Okay. So, yeah, actually, it was one of the most frustrating things as an adult going back to university is to figure out it's not the truth that gets you the A degree. To get an A at university, you have to just give the professor what they want. And in the beginning, I used to fight all the time. And then I realized, you know, you just got to crank out the work. University doesn't teach you how to think, but it proves that you have the capability of grinding through the work. So, la 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 la. You know, it's funny, insanely expensive. You know, that does, if it was $1,600, that's like a week of school. I mean, it's funny. It's not insanely expensive. Okay. Yeah, but even then, $1,600. That's what that doesn't even get you to a midterm. I mean, no, it's not 1 week. It's probably 2 weeks of one class, not including textbooks. So each of my classes, I probably, let's say each semester at school, I must spend $1,000 on textbooks. So, yeah, I don't find that insanely expensive. But anyways, so but 382 is stupid cheap, but okay. Anyways, anyways, I think I'm done. So, I think I'm done. I'm going to be here every day. So, last summer I was here every day, but I was working out of Kirkland House. And to remind you that Kirkland House was where Facebook was invented at Harvard. And in fact, I was in, I forget the hall that I was in. I was up on the top floor looking at Elliott House through my window. if you're just the sort of the next hallway over was where Zuckerberg had his dorm, and the room where he created Facebook, which was kind of interesting. And that last summer, I decided to crunch through the insanity that I have to go through in summer, and I did all the webinars there. The year before and the year before that, I did not do daily webinars. I will do daily webinars this year. So this year, Harvard is shut down for the summer. No one is allowed on campus or in classrooms or at lecture. No one. There's none. So I get to stay home this year, which is actually a crying shame. So I will be home. So my webinars will look like this. But you know, I have these books I need to get through in the next 7 weeks. Okay? And to the person that said 50 hours of training videos are insanely expensive, here's $400. Here's $400. This is just the books. Okay? And this is only probably $150. So anyways, you know, there's $1,000 right there, and that's not even the training. So I don't find things that expensive. But on top of that, well, it's expensive maybe traditionally compared to what you've gotten before, garbage in, garbage out. But nonetheless, because of COVID-19, I dropped the price from $1,600 to $382. It's been $1,600 for 10 years. So it's right now $382 or something because of COVID-19. So I don't know. Hopefully 50 hours is worth it. I don't know. So anyways, so I'll leave you guys with that. I'm here every day for free. Thank you, tradersway.com. Been here every day for about 15 years now. My prime directive is to help you trade plan. Like I showed you today for over an hour, basically how to break down one trade piece by piece, planning the future, planning what you should have done today over the weekend, what you should be doing now, how to plan the rest of the week, how to plan the fade early next week, and how to enter your next trade next week throughout your monthly trade plan. So I gave you the plan for the week, the plan for the month, plan for next week, the plan for this week, and then lastly, most importantly, right, why, being the Fed meeting, and then lastly, the psychology behind trading now versus trading 3 weeks ago. Okay? John says, how long will the offer be there? I was supposed to take it down 2 weeks ago, but I've been busy. So, I don't know. So the point is, over the years, I've been asked for various levels of resources for traders. It started with, can you write us a book, create training courses, create a live trading group, do this, do that, and those are all there. Those resources are there, and they're available to help you improve your trading. And so, like, my fear is if you don't understand these basic things, you literally don't know how to trade. And that's the problem. It may not be, you might have decent trading techniques, like you might use some of the tools well, you might be really good at scalping or something like that, but I'm trying to teach you how to analyze market conditions, both technically and fundamentally, understand the traders who make those markets, the market makers, and then plan your month, plan your week, plan your day, all before you're even looking to pull the trigger. And that's the part that is most important. Okay? That's what's most important. If you don't understand how and why the market works the way it works, then trying to find your little trick to make money, oh, well, if you line up these 9 different moving averages, that'll do it for you. Or if you combine your MACD with your RSI and your stochastics, then you'll get this works every time thing. But you should stop looking for the trick. You should stop looking for the holy grail. You should stop looking for the algorithm that if you only had that tool, then you'd be successful. It doesn't exist. And I've tried for a long time to find a lot of these things. And instead, I just fell in love and created a passion for actually being a trader. And to be a successful trader, yeah, you can use these tools, but you can use other tools. To be a successful trader, you shouldn't be thinking about today. You need to be planning tomorrow, right now. And this week, based on the combination of technicals and fundamentals and trader psychology, my best guess is that we will be taking profit instead of holding on, hoping this goes 500 pips. Well, buy at the bottom, take profit at the top, and then we'll reset next Sunday. That's right. I'm trying to help you accurately predict the future every single day. You need some macroeconomics because this is just business, that we're analyzing global business. That's all. You're going to need some technical analysis because you have to determine what time and what price is a good trade. Okay? And then you need to understand the market participants, their psychology, where a bear would where a bear would sell and where a bull would buy. Those are the big 3 things. It's not overly complicated, but if you're asking the wrong questions like what indicator will make me money, which combination of indicators will think for me, then they're the wrong questions. The right question is, based on my analysis, where do I think this is going to go? And if so, what's the right time and the right price to enter and exit these trades? They're better questions. They're the right questions. So, without further ado, whoop, that's the wrong one. That's the wrong one. I guess I was trying to go here. There we go. So, for my friends, the bulls, the bears, and the pigs, right? From the bull, I can't point. Right? You got the bulls, you got the bears, and you got the pigs. Namaste. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow and again and again and again all week. So wish me luck at Harvard. This is my last one, and then I'm a master. Cheers. Master. Master of